Hey Utah friends, Nate here with Keyrenter Property Management. So in a market like the one we have had the last year or two of record housing prices and growth, like over 30% in 1 year in a lot of areas, many of us wonder, okay, so what's next? And now what should I do with my rental property? How are rents going to be affected? Well, it's no secret that the housing market has started showing signs of normalizing in many areas. Although it's still a healthy sales market, a lot of realtors are starting to report that the supercharged, or as people call it, the crazy market caused by the COVID-19 supply shortage is actually starting to slow down and normalize. And instead of getting 10 to 20 offers at once, a lot of them are saying that they're getting 1 to 3 on most listings. Dion Eskich, who's the Senior Research Fellow on Housing at the University of Utah, has also said that he's not expecting the market to fall in the next 6 to 12 months, and I agree, since days on market and interest rates are still at record lows. But since we have hit the affordability threshold in a lot of areas, as well as having fatigued buyers from all the chaos, we should continue to see a stabilization. So for us as rental owners, what could this mean? The way I look at it is over the next 12 to 24 months, you will continue to see the rental rate catch up that we have traditionally seen following periods of dramatic growth. Home prices go up, rent stays at a consistent and stable growth line. Home values stabilize or even go down, rent stays at a consistent and stable growth line. That's why we love real estate, right? This will continue on, but right now the jumps are higher and will continue that way as leases get renewed until we break through the rental affordability threshold. We've already started seeing that in a lot of areas too, which is causing multiple family units to try to find housing together, which, as you know, can create other challenges that we're discussing with the UAA Government Affairs Committee. The topic of affordability and affordable housing is always on our agendas in that committee, and we're trying to figure out some solutions with cities and government. But I think it's a great time to start buying some investment properties in the Salt Lake market again, as we see some slowing and rent rates catching up. Obviously, these are all signs of inflation, and you have probably seen in other areas too, with prices starting to increase at a higher rate. The best way we know to hedge the risk of inflation is to buy real estate and hold it long term. Super successful real estate investor and author David Osborne said recently in a masterclass I was a part of,
there's not a single person on the Forbes billionaire list that doesn't have $1 billion worth of assets. And one thing you'll notice about wealthy people, and I've studied, wealthy people for a long time. I think money always meant freedom to me. So I always wanted to be financially free. And Wealth Can't Wait covered it. Miracle Morning Millionaires covered it. But the wealthy people own assets. And they generally aren't sellers. They're generally holders and buyers. And I kind of make it a mission to speak to 3 people that have a very high net worth every year and kind of interview them and figure out what it is that got them there. And, the majority of people that have big wealth started a business. But the second most common trend is they just own real estate and never sold it.
And David goes on to talk about the 120 plus homes he personally owns and how he has grown his wealth simply by not selling, even when the prices were high, like in 2006, 2007. Now you can have a property that you want to exchange, and that's totally fine. A lot of times we have properties that we just want to exchange it for a different type or a different class, but to cash out completely is not the answer. You can watch his full interview with Second Nature using the link in the description. He talks all about how he went from 1 to 120, how he finances them, partnerships, and all kinds of great things and golden nuggets. I would start at minute 6 to jump right in and skip over some of the fluff in the beginning. So what do you think? I'd love to hear what you think, and read some of your comments. Are you seeing the sales market stabilizing too? Are your rents starting to catch up with that? What's your investment strategy? Are you looking to hold for continued wealth and maybe buy more? Or if you're cashing out, I'd love to hear why and what your strategy is with that. And if you liked this video, hit like, and you can subscribe so you don't miss one. Until next time, stay safe and be happy. Take care.